Is Lam Research stock ticker LRCX a possible buy now? We're using the Select 6 analysis to look at the most telling financial metrics before estimating a fair value for Lam Research. You'll want to stay till the end when we give our rating to the business. Along the way, there's going to be a key bonus metric that just might be the tipping point when analyzing Lam Research for your stock portfolio. This analysis is going to be intense but worth it. Before we get into these valuable metrics, how has Lam Research stock performed? Right now, Lam Research trades for $626.77 per share. The company trades $100 below their 52-week high. They're up $327 from their 52-week low. There's some short interest with 2.5% of their shares sold short. Lam Research is a huge company. They have nearly an $83 billion market cap. Year to date, Lam Research is beating the socks off of the market. They're up 51%, while the S&P 500 is up just 12%. In the last decade, Lam Research is one of the top performing stocks. They're compounding at 29% annually. Other semiconductor stocks in this time are also among the top performers. Going back before the global financial crisis, in the last 18 years, Lam Research has compounded at 19% annually. Since 2014, they've really been beating the market. Right now, Lam pays a 1.14% dividend yield. Their average dividend yield over this time is added to the returns in their stock. But the burning question is, why should we be paying close attention to Lam Research? Lam Research manufactures equipment used to fabricate semiconductors. The firm is focused on the etch, deposition, and clean markets, which are key steps in the semiconductor manufacturing process, especially for 3D NAND flash storage, advanced DRAM, and leading-edge logic and foundry chip makers. Lam's flagship Kiyo, Vector, and Sabre products are sold in all major geographies to key customers such as Samsung, Micron, Intel, SK Hynix, and Taiwan Semiconductor. The company was incorporated in 1980 and is headquartered in Fremont, California. With that background, now let's dive deep into their numbers. Starting with metric number 1, we want their average return on capital in the last 5 years to be above 14%. A typical business earns 7% returns on capital. Looking for a benchmark that's double this can build in margin of safety based on the quality of the business. Lam has increased their returns over this time. Their lowest returns in this period were at 24% in 2020. In their most recent fiscal year, they earned 39% returns on capital. When these are averaged out, Lam earns 35.5% returns in a given year. That's 5 times better than average. This is a huge check on our first metric. Metric number 2, we're looking for revenue, net income, and free cash flow growth. This metric's all or nothing. These all need to be up. We'll also include their numbers up until today. In this time, Lam has grown their revenues by 80%. Their earnings have more than doubled, and their free cash flows are up 63%. This is strong growth across the board to support their high returns on capital. It's another check on metric number 2. Metric number 3, we're looking for earnings per share growth. This looks at Lam from the view of an individual shareholder. We learned their earnings, aka their net incomes, have more than doubled in our last metric. At the same time, Lam's bought back 11% of their shares outstanding. This increases the ownership percentage for existing shareholders in the business without them having to spend a dime. Almost as if Lam is making a partial acquisition of itself. It'll depend on what valuations these buybacks were taking place at. Thankfully, we're using 2 different methods to estimate Lam's fair value later in our analysis, so stick around for those to see if this created value or not for shareholders. Either way, with more earnings and fewer shares, their earnings per share have grown. This is another check on metric number 3. Lam's perfect to start. Metric number 4, we're looking for free cash flow per share growth. A similar situation here. Their free cash flows have grown by 63%. With 11% share buybacks, their free cash flows per share are up even faster than this. Another check here on metric number 4 means we're still perfect through 4 metrics. Can Lam keep this hot streak going? We'll find out right after we cover our bonus. Right now, Lam pays a 1.14% dividend yield, but is that supported by their free cash flows? That's what we're looking for as our bonus metric. In this time, Lam has grown their dividends per share in all of the last 5 years until today. They've also grown their free cash flows per share and their earnings per share over this time as well. In the last 5 years, they've easily supported their dividends using their free cash flows. They maintain a modest dividend payout ratio that even as these have grown, their dividend payout ratio is smaller today than it was in 2019. Lam supports their dividends through and through. This is exactly what we're looking for. It's a check on our bonus. In recessions, it's businesses with too much debt that can have the biggest losses or even go bankrupt. Metric number 5, we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the sum of their free cash flows in their last 5 fiscal years. Lam ended their fiscal 2023 with $125 million in cash left over on their balance sheet. It's great to see they have a cash position here. In the last 5 years, they've generated $15.3 billion of free cash flow, including $4.7 billion in their last year alone. That's huge free cash flow coming in with this cash position. Their balance sheet seems to be in strong financial shape. It's a check on metric number 5. Flawless through our first 5 metrics, let's find out if Lam Research has what it takes to go 6 for 6 and be a perfect Select 6 stock. The big metric of them all, metric number 6, we want Lam Research's average 5-year free cash flow divided by their enterprise value to give us a yield that's above 5%. If this is the case, this gives a slight risk premium to the yield of the 10-year treasury. It's the first of 2 different ways we'll use their free cash flows to estimate a fair value for Lam Research. Right now, they have an $83 billion enterprise value. This accounts for both their net debt position and their market cap. It looks at Lam Research similar to it being a private company. In the last 5 years, we learned they generated $15.3 billion of free cash flow. This means they generate just over $3 billion in an average year. When we divide that by their enterprise value, we get a 3.7% average free cash flow to enterprise value yield, right about in line with the yield from the 10-year treasury. On a current basis, Lam Research produced $4.7 billion of free cash flow in their last 12 months. When we divide that by their $83 billion enterprise value, we get a 5.6% current free cash flow to enterprise value yield. That's coming in above the risk premium we're looking for. However, their average and their current yields are split on either side of that risk premium. Free cash flows can be lumpy, which is why we're using their average here. Even though this is in line with the yield from the 10-year treasury, it's down from our risk premium. This means coming in all the way on metric number 6. This is our first and only X of the day for Lam. Don't just throw the business out. We're not finished. We still need to estimate their fair value per share and talk about our rating. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze Lam Research. This takes us on to using a discounted cash flow model to estimate their fair value per share. A DCF model is based on the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. Lam Research has been a highly predictable business in its past. We're starting with an average of their last 3 fiscal years worth of free cash flow, then taking historical assumptions to grow these into the future. It's up to you to figure out if these will be accurate or not for the business. If we assume they grow their average free cash flows at 12% annually for the next 10 years, then in the following decade, if these grow at 6% annually, we'll add in their tangible book value to give an estimate of their net worth. If we want a 15% rate of return, which is what Warren Buffett looks for from his investments, from today's valuation multiples, if these are the same 20 years into the future, an estimate of Lam Research's fair value per share is around $390. While this is down $236 from their current stock price, it's actually $91 above their 52-week lows. It's well within the range of where they've traded in the last year. Keep some key points in mind. Lam has been highly predictable in their past. That's not a guarantee for the future. Semiconductors are a cyclical industry, and as a key semiconductor manufacturing supplier, Lam Research is subject to that same cyclicality. Some of the top performing stocks in the last decade have been semiconductors because this has been a pretty good time for the industry. In the last decade, Lam's traded for a median of 19 times earnings. Right now, that's right around where they're trading at. They've traded for a median of 17 times free cash flow. Right now, they're trading at 17.5 times, so they're in line with historical multiples. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. In just a minute, we'll give our rating to Lam Research, but we need to address something first. We've covered the numbers, but their qualitative factors may be even more important. What are they? Let's look at a long thesis first. Number 1, Lam is a dominant supplier in the dry etch and deposition markets and counts major chip makers such as Samsung Electronics and Taiwan Semiconductor Manufacturing as customers. Number 2, Lam has achieved share gains in recent years due to its strong equipment offerings in etch and deposition, combined with the 3D NAND and multi-patterning inflections that require more of those particular tools. Number 3, demand is strong for advanced etch and deposition tools because they help chip makers continue down the path prescribed by Moore's Law. But we'd be remiss if we didn't cover the negative factors of their business as well. Let's look at a short thesis for Lam. Number 1, Lam faces competition from Applied Materials and Tokyo Electronic and would lose market share should it lose its technological edge to either firm. Number 2, as we mentioned, the firm operates in the cyclical semiconductor equipment industry. Number 3, the rise of EUV lithography has the potential to curb growth in the multiple patterning opportunity that has greatly benefited Lam in recent years. Those are some balance factors around Lam's business. Now let's talk about our rating. We've learned through analyzing Lam Research, stock ticker LRCX, the company goes 5 for 6 on our analysis, including checking our bonus. They have a lot of the signs of being a wonderful business, including high returns on capital, good growth, share buybacks, minimal debt, and lots of free cash flow. Right now, their average free cash flow is about in line with the yield from the 10-year treasury. On a current basis, it looks like it's above a risk premium we'd be looking for. Lam may or may not be attractive based on that. It's more about your particular investment goals. Keep in mind this isn't financial advice. When we performed our discounted cash flow analysis, from today's valuation multiples, if they're the same 20 years into the future, you believe those assumptions and you want a 15% rate of return, an estimate for Lam's fair value per share is around $390. That's more than $90 above their 52-week lows. It's comfortably within where they've traded at, even if it's below today's stock price. When we look at all the factors of our analysis, Lam looks like a great candidate for more research. If you enjoyed learning about Lam Research, like the video and subscribe to the channel for more.